Hey, this is John Starks. You be down here on the street and you watching Taking Stock.
I need just a picture of me. Come on.
2 minutes to go here into the closing bell on this Friday, June 5th. The S&P 500 in negative territory, 2.5% at this hour. The S&P now trading back to where we were on the afternoon of Thursday, May 21st. Quantum stocks, memory stocks, software, and semiconductors all getting throttled on this Friday afternoon session. Join us now to kick off the broadcast for a bit of much needed perspective, a longtime veteran voice down here on the trading floor, the Einstein of Wall Street, Peter Tuchman. People will look up, they'll see the red, they'll think, oh my goodness, what went wrong? You've seen a lot of days like this. What did you see into the close?
Well, you know, I've seen this movie before. One day does not make a market. There's a lot going on. We talked on, you and I were here on Wednesday. We talked about the fact that the movements in stocks have been so radical on the upside and the downside. The market is not particularly forgiving, right? We saw that Broadcom, Micron, they are heavily selling the chip stocks and buying software, which is sort of where there was value, right? This is coming into a weekend. It was sort of catapulted off. People are looking at the market and going, you know what, there's no reason why I shouldn't take a little bit of stuff off the table here. And then that kind of catapulted into it. At one point where we saw a bounce was Mr. Trump came out and said, you know, everything in Iran is actually okay, everybody. I'm not sure why the market is down. We saw a little pop, but it didn't get the energy it needed. This is not a broad-based sell side. This is very centric in the chips, right, and some of those other names that have been so overinflated, right? So don't look at this as big as it seems. The stocks that have been up and down.
Time now for the bell. All right, the team from the newly listed SPAC Future Corp down here on the trading floor of the big board, bringing about a close to today's trading action here on Wall Street. They will also join us here on the broadcast in just a bit. Your final tail of the tape on this Friday, June 5th. The S&P 500 in negative territory, 2.6%. Essentially closing the day pretty close, not quite at session lows, but not very far off. The Dow down 1.3, the New York Stock Exchange Composite Index also down 1.3, and the small caps, as to be expected on a fair bit of profit-taking day like today, the Russell 2000 down 3.47%. Handful of falling knives, friends. Take your picks. Software stocks led down by MongoDB. Shares down 7% on the day. The auto majors, Rivian the hardest hit. Semiconductors, Marvell. It's had a wild week this week, but today shares down about 12%. Memory stocks down. SanDisk the hardest hit among those names, down 11% into the close. And quantum stocks getting hit hard on this Friday. Arcot shares down 12% as well. All the Mag 7 tech stocks lower. Tesla leading those losses to the downside. In the Dow, you do have a handful of winners. It's a risk-off defensive day. So Procter & Gamble, Coca-Cola, and Travelers Insurance are your Dow leaders on this Friday. Let's bring in one of our favorite guests. This is Michael Monahan, partner and portfolio manager at Founder ETFs. Good to see you.
Great to be here, JD.
So you are a longtime veteran in this game as well. We're going to look up. We're going to see a lot of red on this big board. A lot of people saying, oh goodness, what happened? I thought we were at all-time highs. This is pretty normal. I think this is pretty healthy. When you have all these all-time highs, we knew at some point we'd have red on the board. What did you see today?
Absolutely. We saw the jobs numbers come out. We think the reaction was overdone. We actually think this jobs number is very positive. What it's showing is, number one, Main Street is growing. It's not just artificial intelligence. We're seeing Main Street jobs being led by restaurants. And restaurants are typically a leading indicator of where consumer confidence is going. So we think once people go home for the weekend, read the weekend paper, have a nice cup of coffee, we think we're going to buy them on Monday.
Was this a big surprise for you to see a far hotter than expected jobs print, 172,000? We've had prints like this before. But we also had this indication of easing gradually month to month, and today really knocked the cover off the ball.
So for us, we've had a contrarian theory the last 3 months that have said, look, the AI job loss concerns are overdone. It's been our viewpoint that we're starting to see the early data points come in that AI will not only not destroy jobs, it'll help create jobs. It's not a matter of AI taking humans' jobs, it's humans using AI, taking jobs from humans who are not using AI.
What is your take on the Fed? We got lots of Fed watchers out there. They're curious to know what this new look Fed, 2 weeks from this past Wednesday, we'll get Kevin Warsh's first FOMC meeting. We came into this year maybe with the expectation of several interest rate cuts. Then you get this hot print. Is that off the table, cuts for the year?
So I think what we're going to see is, to your point with this hot economy, Kevin was brought in, people were expecting a rate cut, the economy is doing better. We'd actually take a little better economy. We think that's better for the markets. We think that's better for Main Street. We don't necessarily think we need cheap money. We think we're in a little bit of Goldilocks. So certainly we're not going to get a rate increase. We think we'll hold rates steady, which given these numbers is a little bit of a de facto rate cut. So we feel very good. So we think Kevin will hold rates flat, and we think that the market will read through this near-term downturn and appreciate the strong underlying job growth.
But I couldn't help but hear that you don't have a base case for a possibility of a 25 bips interest rate hike. Not in your cards.
Not in our cards. Certainly that could happen, but we really think that the compromise will be no rate cut, no rate raise, and we'll keep watching for another quarter or two.
I want to ask you about a few of these names I know are on your radar: Palantir, Oracle, Dell. Maybe some misunderstanding about how those big tech stocks are placed right now or where they could go?
Yeah, so the fundamentals are strong. Let's talk about the trading action today. Obviously, those stocks trade on future earnings. Those terminal multiples got compressed as fear of rate cut going away came into the marketplaces. But from a fundamental standpoint, the growth in AI continues to be very high. Remember, Palantir grew from 127 to 145. Rule of 40 last quarter. We saw the great number out of Michael Dell and his AI server growth, along with the product announcement in conjunction with Jensen Huang about the combined CPU, GPU chips. So all of these stocks, and Oracle we're going to see next week, we think Oracle could put up a great number as Larry Ellison, with that founder mentality, got out early, building the profitable but unsexy side of the business of AI infrastructure. We think we're going to see that play out in next week's print.
All right, Michael Monahan with a bold call here for Monday morning. We'll look for the tape after this weekend as the dust continues to settle. It's nice to see you again. Thanks for joining us.
Great to be here. We hope the Knicks do well and the market rebounds on Monday.
Yeah, we hope the Knicks win and the markets continue to win as well. Thanks for joining us. Robbie, grab your mic. Jeff, here are the latest Polymarket odds, all about, of course, the NBA championship. How could it not be about the NBA on a day like today? Game 2 of the NBA Finals tips off tonight in San Antonio at 8:30. For tonight's game specifically, 68% odds, at least in the hearts and minds of Polymarket participants, that the San Antonio Spurs will bounce back after losing Game 1. But for the overall championship itself, as of this afternoon, 53% chance it is the New York Knicks to win it all, 47% chance for the Spurs. More than $411 million in total trade volume on this one event contract alone. I've been doing this a long time. You don't see Polymarket contracts get quite that big. Game 2 of the Finals tips off tonight in San Antonio at 8:30 p.m. Jeff, we'll take a look here at the big board. For what do we have? Oh, we got to look here at Future Corp. This is one of the highly anticipated space SPACs trading here on the day. A nice indication after the range, trading up to $10.13. Coming up after a quick break, we will chat with one of the many influential minds behind this SPAC, what the space means for the general space of space, and why right now is the moment to hit the public markets. Earlier this week, FinTech TV's lead anchor sat down with Amber Sewer-Brian of Kaiko to discuss the acquisition of Amber Data and much more. Take a look.
And as digital assets scale beyond crypto into broad-based tokenized assets, TradFi institutions are demanding more robust as well as regulated data infrastructure to manage risk and also execute trades. Today, massive consolidation in that space, Kaiko announcing its acquisition of Amber Data, creating a global, independent, as well as regulated data and analytics company for the digital asset industry. Combined, they now serve over 250 major institutional clients across 3 continents, as well as covering more than 12,000 digital assets 24/7. And joining us now to discuss this landmark deal and what it means for the future of institutional finance is Amber Sewer-Brian, who's the CEO of Kaiko. Amber, good morning. Thank you so much for joining us. Well, you just announced the acquisition of Amber Data, so tell me about the strategic move and why this specific deal is essential to unlock mass institutional adoption.
Absolutely, and thank you so much, Remy, for having me on. It's a very special day today. I think it marks one of the most significant consolidation in the data space as far as digital assets and blockchain are concerned. And I think it's really important, specifically in the context of the expansion of digital assets from crypto to a broader tokenized assets and real world assets on the blockchain. What we're doing here with this acquisition is really consolidating the data and analytics side of that data industry. The other two main pillars of Kaiko's business are 24/7 indices, initially designed for crypto and now increasingly catering for non-crypto assets, as well as data infrastructure. And the combination of data and analytics, regulated 24/7 indices, and now data infrastructure, which is essentially the distribution rail for data to be brought on chain, is extremely powerful. And today, Kaiko is the only global independent company that offers a pure play in the world of data solutions and data infrastructure solutions for digital assets as they outgrow crypto and enter the world of real world tokenized assets.
Yeah, and as you mentioned, Amber Data does bring a blue chip client base that relies on derivatives analytics as well as on chain data and market intelligence, in particular AI. So, how does integrating these specific capabilities enhance your ability to serve major hedge funds as well as asset managers?
It's very interesting, and you're absolutely right. Kaiko historically has focused more on financial institutions, data companies, market infrastructure companies, regulators, research, focusing on digital assets, obviously, whereas Ember Data has been extremely strong in selling to the more highly active investors in crypto assets. And you mentioned market makers, traders, hedge funds. And so this comes in as an extremely synergetic deal. Kaiko serves about 200 clients globally, Ember Data roughly 60, with barely any overlap in our clients that we serve. And the focus on Ember Data on these types of more active crypto investors is also due to the nature of their product offering, which is very, very strong in analytics and derivatives data. Something that we also offer, but that Ember Data is offering is going to come strengthened significantly. And so a big part of the integration of the two companies is really merging the two offerings and creating this market leading data and analytics offering, which involves everything from tick by tick real time trades for any kind of spot or derivatives instrument traded anywhere globally. We have all tick history for any crypto trade that happened since Mt. Gox in 2010, all the way to very sophisticated analytics, IV, implied volatility surfaces, risk models, liquidity models, market depth, all of these data products that are essentially a derivative of the raw market data offering. So the Ember Data really comes in to bring on a part of the addressable market that we're absolutely delighted to welcome on as clients of Kaiko, and really strengthen this analytics side of the offering.
Well, Ambre, congratulations on this morning. It was great talking to you. Thank you so much for sharing the news with us. I appreciate all of your time as well as your perspectives.
Thank you so much, Randy.
Welcome back to the show. Before we toss there to commercial break, we brought you the latest numbers after the indication range officially met its match for Future Corp. Joining me now, founding partner at Future Corp, Sudhin Shahani. Good to see you. What a day, man. Congratulations.
Thanks, JD.
First and foremost, let's start with a little bit of an introduction, not just to Future Corp, but what this moment, what this day really means to you.
Yeah, so look, it's a big day for us. We've got this great team we've put together, and we're launching a new firm, Future Corp. The SPAC is our first product, Future Corp Space Acquisition 1. So it's the start of an amazing journey for us.
Yeah, and obviously there's a lot of emphasis, a lot of hype here on Wall Street about the big SpaceX listing, which will take place 1 week from today. What do you see is going on in terms of the general momentum and excitement about the space ecosystem, especially here on Wall Street?
Well, I mean, look, we're obviously very excited about it. There's this incredible moment in space right now where, because of the because of the amazing things SpaceX has done with launch costs coming down where they are, there's this whole new wave of industrial space companies that have been enabled. Like in the next couple of years, it's going to cost less than $100 to send a kilogram into low Earth orbit, which means companies can go and make, we can create private space stations, you can make drugs in space, you have interoperable transport. There's a whole next generation and an industrial revolution, we think, happening up in space.
And the timing of these decisions, it doesn't come together by accident, and it's not certainly a flip into detail for you and your team. Talk to me about the timing. Why is right now really the right moment to take such a big step like this?
Well, I think that we've always had the view that public market investors deserve better access, and there's a group of space companies now that are in that kind of multi-billion-dollar valuation ranges. They've raised a lot of venture capital. It's not necessarily the most efficient path of capital for them going forward. They need a lot of capital. They've got long-term predictable business plans. They are well suited to cross over to the public markets, and I think the individual investors understand, given that we're in a space race, that these are exciting companies to invest in.
About a month ago, we were lucky enough down here. We did a huge clap on. We had the actual Artemis II astronauts came down here onto the floor. Space is having such a moment right now. What do you assign that enthusiasm to, that the whole country is experiencing?
Well, I think there's just a general enthusiasm. I mean, of course, SpaceX has been a big driver of it. Of course, like all the government spending, the movement of the government kind of going and working with private space companies and doing more of a buy than a build is helping. There's of course space applications in defense, there's space applications in communications. I think people are realizing that space isn't just about kind of buying a ticket to try and go to the moon. There's actually real world applications where we can do things in space that make life better on Earth.
The ticker symbol FTRA, first day of listing, brand new SPAC down here on the trading floor of the big board. Sudhin Shahani, founding partner at Future Corp. Congrats, huge day, man. Way to go.
Thank you.
Take care. A lot more Taking Stock coming up on this Friday afternoon, live from the big board right after this. Welcome back to the show. FinTech TV's very own Anastasia Kinsky was at Money 2020 Europe earlier this week, and that's where she sat down with Malin Holmberg, CEO of Experian UK and Ireland, to discuss artificial intelligence, innovation, and the future of financial services. Take a look.
Experian is at the center of a rapidly evolving financial services landscape where data and AI innovation are reshaping how people and businesses interact with money. To hear more about it all, I am joined with the CEO of Experian UK and Ireland on the Money 2020 floor, Malin Holmberg. Thank you so much for joining me.
Thank you for having me.
So let's start with this wonderful event. What is it that you think makes Money 2020 so critical for FinTech and, of course, Experian?
Well, it's one of the areas where you can have a broad conversation around FinTech, probably the biggest in the world. So you have all your clients, all the innovators in the space, and all your partners as well here in one place. So it's really where the conversation happens. And I think this year is particularly interesting because you're really seeing this shift with AI. I think we're at a pivotal moment in the industry, starting from where we are with experimenting with AI into sort of scaling with AI, almost moving into, well, the next era of sort of self-driving money.
Yeah.
And that's where Experian is right at. We want to empower the era of self-driving money.
And how nice to know that the key factor in that is to bring human beings together to actually talk about it. Exactly. So with AI being such a major focus in the world, how is Experian using it to transform AI, in particular in UK and Europe?
Well, I think that the biggest challenge to deploy AI, to scale it properly, is to get it safe, to get a trusted system around it. And that's where we play. So with safe data and trusted governed data. So we have launched a couple of things within the AI space. We launched yesterday here actually at Money 2020, the Experience and Agentic operating system within our SM platform. And that will help financial institutions scale AI through the whole lending journey. And we have another product we launched a few weeks ago, which is the Trusted Agent. And that we did with Visa and a few other partners. And that's really to enable the agentic payment. So back to your point about human, we need to find the human behind the agent, right?
Yes.
And that's what we do.
It's so interesting to see in all of these ways of transformation how much collaboration across the industry is required to really impact the activities that we're looking at. What are you hearing in terms of those clients and partners about the key trends, the demands, and perhaps some of the challenges?
Yeah, I think that the main challenge that we're hearing from our customers is basically balancing the day-to-day operational activities of driving operational efficiency, good customer experience, and at the same time transforming the business into an autonomous banking system with the agentic AI. So that challenge and that conflict is tricky for our clients. So we try to help them with our trusted solutions in the first area of the traditional area of banking. But then in the new space, we try to partner with our clients to really then look at the longer term journey with AI and how we can support them in that.
It's an interesting journey to be on, and for sure discovering new challenges as we go along.
Oh, for sure.
When it comes to the wider fintech landscape, and in particular how Experian sits right in the middle of all of that, what are you seeing or how could you describe the macro environment, and what are you seeing there as some of the challenges?
I think if you look at the fintech space, I would probably describe 3 big trends at the moment. So one is you're moving from an era of growth into more of profitability and managing that bottom line for the fintechs.
Yes.
So that's a shift to support that in the industry. I think the other space is fraud. There is a proliferation of fraud, both in volume and the complexity of the fraud.
Right.
So you need to fight fire with fire here, with leveraging AI to fight the AI fraud coming at you. Yeah, so that's the second thing. And I think the third thing is, how do you move into the era of self-driving money? So the agentic AI, how do you do that? How do you drive that in the right place?
Absolutely. Well, in that case, and with that in mind, and that huge question, if we were to sit down again in a year's time at the next Money 2020, what would you say that Experian's success story for 2026 should or would be?
I think success for me and for Experian would be if we have improved the outcomes for clients and customers by scaling AI properly. It's really powering the self-driving money era. That would be a success.
Well, it's a very, very good goal, and we wish you the best with it. Our thanks to Malin Holmberg.
Thank you so much.
CEO of Experian UK and Ireland. Thank you for taking the time, and enjoy the rest of Money 2020.
Thank you so much.
This interview was sponsored by the team at Experian. To learn more about Experian's products, services, and innovations in the world of financial services, head on over to experianplc.com. Don't go anywhere. We got a lot more Taking Stock coming up for you live from the trading floor of the New York Stock Exchange right after this.
We are live here from Money 2020 Europe in Amsterdam. It is the last day of the show. My name is Tina Lonkerik. I am Global Director of Public Relations at Money 2020. I am here with wonderful Bryony Naylor, VP of Money 2020 Europe. She runs the show. We have so many things we've seen here throughout these 3 days. Obviously, there is different trends we're noticing on the floor. Much like in Asia, we see AI and stablecoin everywhere. But Bryony, what else have we seen here throughout these 3 days?
I mean, we've seen some amazing speakers. You know, you mentioned stablecoin. We had Arjun Sethi from Kraken speaking. But also we had people like Seb from Klarna. You know, it is not just about AI and stable coins, although you'd be forgiven for thinking that it was about that. I think we also see fraud coming up a lot on the show floor, and I think, you know, we had an announcement yesterday from the EPI around European sovereignty. You know, and that's obviously a massive topic at the moment, especially you know, in Europe. Especially. So yeah, it's been a busy few days.
Yes, we have had many great announcements. We had one big announcement from MoneyGram at the opening, MoneyGram and M0 announcing a stablecoin enablement. Incredible news stories. Yeah. Also, we are here for the 10th year. We are celebrating the 10th anniversary of Money 2020. Bryony, you have been part of this journey. You've seen the brand grow, you've seen it scale. What is the success here? What is the key success? What is the secret sauce of this success that we're seeing here in Amsterdam?
Yeah, I mean, I think, look, you know, it's all about the ecosystem. It is all about bringing together the entire financial services, everyone who plays in that space, bringing them together. And I think, you know, we spend so much time curating the agenda, the show floor, the experience of our delegates, you know, and ultimately it's about ROI. You know, we want to make sure that everyone that is here, you know, really gets a lot of value from the show, whether they're attending just for content or they're attending to make new partnerships or meet existing partners. So I think we really think about that a lot, and we really think about how we curate that audience. And I think the best bit about the last 3 days has been seeing it all come to life and seeing those serendipitous conversations happen, you know, in the corridors over a coffee. So it's been a good few days.
Fantastic overview. Bryony Naylor, VP of Money 2020 Europe. Thank you so much. We cannot wait for next year.
Thank you for having me, Tina.
Thank you.
What a day, what a week it has been here on Wall Street. Next week here on Wall Street, we'll get the latest prints for CPI inflation. That crosses the tape for investors to digest on Wednesday. On Thursday, Peter Tuchman, we get PPI wholesale inflation print for investors to look at, plus quarterly results from names like Oracle, Adobe, Campbell Soup, and much more. But before all that, tonight, Game 2, NBA Finals, Knicks Spurs. Who do you like?
Einstein-sized ball. That's the kind of ball I play with.
You're looking for the Knicks to win tonight, aren't you?
Of course I am.
Go New York. Have a great weekend.
12 in a row. I mean, they're playing like champions, right?
Playing like champions. Speaking
They're
of
playing
champions,
like champignons.
from the man who knows. Thanks for watching Taking Stock. Go Knicks. Have a great night. We'll see you on Monday.